Good afternoon, this is Rich Nelson with Allendale covering the wrap-up comments. Today is Friday, January 13th of 2012 here. Obviously some outside market pressure helped things out on the grains here today. The fact that U.S. dollar finished up 73 points. This was pushing to newer highs here for that U.S. dollar. Gold down 12 and the crude down about 20 cents in reaction. Of course, the trade's a little concerned about the discussion that the S&P rating service may lower a few countries out of the Eurozone, so certainly of concern there. So that did exert a bearish pressure on grains. So not only did we have a little follow-through on the USDA report from yesterday, we also had this other issue here today as well. Corn down 12 cents. We did flirt with that $6 range and actually passed through it here within about the last hour of trading. Soybeans down 24 1/4 cents, and wheat down about 2 3/4 cents. As far as news, a little quiet here today as far as brand new grain news to speak of. One thing we were interested in seeing here at Allendale was the results of that study that we released to subscribers yesterday. And that result said, or that study said that usually after these January reports, at least in the past 5 years, that prices do extend for a second day in the same direction as that first day price reaction. So we did see that here today, and that actually fit very well in today's 12-cent lower trade there for corn. Keep in mind, we do have a 3-day weekend ahead of us, so it's going to be a little quiet, of course, in the office here Monday, but we will be back on Tuesday with all kinds of new information to speak of as far as what's going on there. Over on livestock, we've got the cattle up $1.52. What's interesting right now in the cattle is we have the futures posting some solid gains here on what's actually really no major change in mindset. In fact, news is still a little rough. Midday beef report down $2.53 for choice and $1.50 for select. For the week, through the midday report, this now pushes choice down $5.88, select down $3.48. So obviously, as far as most short-term fundamentals, that is a negative issue right now. We are still seeing wholesale beef have some pressure. We got two possible explanations for why we've got this rebound here today. Number one, the fact that we're now seeing this cold issue, cold temperatures return back to Midwest. Chicago-based traders will be viewing this as well. Maybe this is the end of the warm weather, and therefore maybe the end of warm weather gains in the plains. So that's the mindset that many traders may have had going into today. Our second issue here for the cattle, keep in mind we do have record prices were posted in many sale barns this week here for both calves and feeders. So the bottom line as far as cattle, we are seeing this long-term liquidation problem in the cattle industry is now actually beginning to show up on the calf and feeder end, and maybe we are going to see some lower replacements in the coming weeks. So we'll have to watch closely to see if this type of action continues. Over on hogs, up $1.85 for that February contract. It was interesting to see. This is also similarly made, just like the cattle, on really not a whole lot of brand new news to speak of. We've got kill levels were reduced here today with one well-known packing plant down in the southeast part of the U.S. was down for the day. That was with some planned maintenance. So we have some other issues going on with hogs. Perhaps we're seeing now this lower corn price. Maybe some people are going to see a little lower marketing pace now here. With cheap corn, maybe it's not going to be as expensive to feed out these hogs for an extra few days here. The other issue to speak of on the hogs is seasonally, this is the time of the year for hogs to start rallying and get up and going. Like that study we talked about on the wrap-up comments here in our research report, normally we do see gains in cash hogs from now between February and 14th, which is when those futures expire. Keep in mind, as far as that February contract, leading up into today, that February contract was actually implying that cash hogs would have little to no rally going over the next month. So that was interesting to see that maybe the trade is starting to rethink its ideas on the potential strength of this cash hog market. Overall, as far as bigger picture issues, like we said, we've got a 3-day weekend in front of us here. Hope you guys have a good, happy, and safe one with your friends and family. Of secondary, Thing to note here, we do have this Allendale well-known annual conference is going to be on next Friday and Saturday. The time is actually now coming up where this is going to show up here. So we've got all of our presentations are sent to the printers. We'll have a manual available to you guys. That was taken care of today. We've got all kinds of planning that we've concluded here to get this conference laid out for you guys in a fantastic manner, and we're certain that you guys will enjoy yourselves. Those who are signed up right now. If you are not subscribed yet or are not signed up yet, feel free to give us a call here at Allendale, 1-800-262-7538. This is Rich Nelson. Have a good and happy and safe weekend with your friends and family.